G'day everyone, welcome to Breakout Wednesday. It is August 7, 2019. So the market's been getting a bit hammered this week so far due to trade war between US and China currency devaluation going on. So we woke up Tuesday with the Dow down about 800 points, and we had a pretty powerful down day on Tuesday in the Aussie market. The US, if we just have a look at this NASDAQ chart here, I guess it's a pretty violent start to a retracement. However, if we look at this correction late last year, it was a lot deeper. We might have a long way to go here, or this just might be a little 1 week correction and then it might power up. Who knows? No one, or maybe Trump might know, but other than that, we just need to take signals as they come and manage risk and all that sort of stuff. Okay, and so today, to talk about, I'm going to rattle through what I've been up to with my short-term account, and then I'm going to talk about my really long investing account, and then I'm going to rattle through some stocks which I'm stalking. Alright, so let's get cracking. One stock I was talking about last week, MVF, stopped out of that when it fell below this support line here, so small win on that and moved on. CLQ stopped out for a loss when it broke this rising trend line there, so I took a loss on CLQ. LPI, he talked about last week, I was mentioning how it had nice relative strength compared to the other lithium stocks. Now it has really good relative strength compared to the whole market. It really didn't give it two hoots that the market was taking a nosedive on Tuesday. It's just been rallying. I've got a full position on that still. I'll take a little bit off if it races up a bit more, and then I'm going to wait for that to base, hopefully another Davis box, and buy more. So I think it's worth watching that even if you've missed this initial breakout, because it's probably got, it might have, who knows, a lot more in it. IVR, let's move on. IVR is a stock that broke out of a pretty decent base on Monday, pulled back on Tuesday. My undisciplined self had a desire to sell it and stop when I saw the market dump in on Tuesday, but we all have stupid thoughts that come into our head and the breakout plan, and I find when the market is doing crazy things like it did on Tuesday, it's very easy to do stupid things and sell too early and not follow your plan. So the way I deal with that is I just turn the computer off and go for a walk or a run, or just do a workout and then just get over it, and it just resets your head. And so when you find yourself sitting there panicking about to do something stupid, just maybe just remember that the world's not ending. Turn the computer off, go clear your head, come back, and if you still want to do that, make that same decision, go for it. Another one I'm watching for. I'm in this. Just broke this little flag here, and it's a gold stock, so got that. Look, another thing that I was a bit late to the party on, Bet. It's formed this nice base ascending triangle here, broke out of it, formed a tight little base, and it's broken up. And so, for those who have missed this, just watch, put it on a watch list, watch it, wait for it to base, form a nice decent base, but there might be more left in this. It's showing all the characteristics of wanting to go higher, but if you miss the initial entries, need to wait for a legit setup. So PET, I talked about last week. Now PET, I realised I didn't have an order in the market for this guy. I was just going to buy it on the day, but I realised on this breakout day coincided with an quarterly activities report. I had not much clue about what that quarterly activities report was saying, so I did not. I think when reports come out like that, you either really know your fundamental stuff, or it's probably smart just to walk away. So I walked away from that one. I'd prefer to wait for the report to come out, the market to digest it, and then the thing to base afterwards, and then go, and then take an entry. So buying on the day of a report, if you don't know what that report really means, is not. It's a bit like gambling. Another one I took a loss on, WPP. I took a position on the breakout, never really broke out properly, and then I got stopped out on Tuesday. So Tuesday's market, definitely shook me out. A bit annoying, but that's the stock market for you. So that's the way things go. Okay, now going to just rattle through what I do in I've got a long-term account, and I guess long-term accounts can be set up in either whatever your own name or a family trust account or a self-managed super fund account, and that's up for everyone to figure out what makes sense for them personally. And so this is completely separate to my short-term account, right? And this is an investing account that the ETFs I plan to literally hold forever, and for my kids to inherit it. And one of the reasons I like doing this is because if all I ever did was be a momentum trader in a short-term account and a day trader and all that sort of stuff, then I just feel like, especially the Breakout momentum account, you've been a bit of a sheep sometimes, I think, in the sense that when the market's strong, we're buying breakouts, and then when the market takes a correction, we all get stopped out. And it can get frustrating, to just be following the masses like that. And so my long-term investing account, I literally do the opposite. I never ever take a buy signal unless we're having a massive market correction of 10% or more. And then I'll just add to select ETFs, and I'll just lock them away and forget about them. And by the time my days are up, I would have collected a lot of dividends with them, and the kids would be left a decent whack of stock. So that's how I do with my long-term account stuff, and obviously the short-term account is more for cash generation and all that sort of stuff, right? So the ETFs I look at, and my basic rule for entering these things is I just wait for the market to be dumping, and I want a 10% correction, and I want it to be at least at its 200-day moving average or even spiking below it, and then I just get in and then just literally forget about it. I don't look at them every day. Sometimes I don't look at them every week. I really never look at them, to be honest with you, except for when the market's correcting. So Hack is one. It's a cybersecurity ETF, which I like. Gear, I already own Hack, so I didn't buy more or anything. Gear, I picked up some on Tuesday. I already have some, but I picked up a bit more. I like this correction. This correction here was just a bit over 10% now, from the top here of 27.64 to down here, which I think 10% was 24.60, and so I got somewhere around 24. So that's an over 10% correction on a Aussie ETF. So for me, I just grab a bit more, lock it away in my long-term account, and wait 40 years, see what happens. Robo, I like. Got some. I have not bought more of that, but it invests in robotics and AI, which I think is going to be massive. It's like Hack. I think all this cybersecurity stuff is going to be huge in the next few years. The next few decades, 50 years sort of thing. Tech. Tech is an ETF I already have some of. I haven't bought more of it. These little zones you see here are just buy zones as far as I can see, for pullbacks. I've got some from all the way back here, and before that too. But anyway, so that's another one I look at. Another one that I like is just the Aussie resources stocks. I mean, the world's not going to stop needing resources anytime soon, so I like big pullbacks on this guy to buy it before buying more. I think if this guy the market can just get absolutely annihilated, and this can just race down to this line, I'm definitely going to get more of that thing. Pays a really sweet dividend, by the way, QRE, so big fan of it. Drug, I don't have any of this yet. I think the top stock is Johnson & Johnson, which I've just stayed away. I mean, this stock's just been going sideways for ages, and I don't own any drug yet, but I'm watching it. However, I do own a few drug stocks, very few stocks in this really long-term account. I just really like ResMed. I've done a hell of a lot of research on this company, and whenever this thing pulls back, I buy more. And so anyway, I hope to own that forever. If this falls below 200-day, I don't really care. I've been here for so long, and I'm just going to let that thing do its thing over the next few decades. CSL is another one on the Aussie market, which I like, and but the rest are just ETFs. On the US market, McDonald's is my thing that I'm just going to hopefully hold forever. So that's how I deal with that. I just like when there's some blood on the street sometimes, to be able to step up and do some buying. I think that's where you make money when you buy, and when everyone's rushing to sell, I like to buy in that really long-term account. It'd be good to do it more in the short-term account too, but it's not my strength. I'm better at shorting and going long on range breakouts, and when I don't see those, I just kind of stay out of that. I don't kind of pick bottoms on stocks that are getting hammered, but very happy to on ETFs because I have such a long-term time horizon. So running through a few stocks which I'm just watching at the moment. AHQ obviously gap down a bit on Tuesday with the market correction, but back up again and nice volume. It's sitting in this box, hasn't been going sideways for too long. However, it's certainly interesting. I just really want this to just chill out for a few days before breaking out. I don't have an order in yet. I really just want it to relax for a bit longer before breaking out. But it's really setting up. So DCN needs more work to base here. It's a gold stock. It's below its moving average and everything, but this can just base here for longer. If this goes over the next few days, there's no way I'm going to buy it. This needs to base for at least another week, and it really needs to tighten up on low volume. But I'm certainly something I'm stalking, and just seeing if it plays out. Nick, I'm still watching. This is just a great example of, buying pullbacks. I mean, I didn't obviously get this or anything, but for those out there that were looking for bargains yesterday, this is a good way to do it. Find a stock you like, and wait for it to pull back to old resistance, turn support, and jump in. And anyway, so I'm still watching that. I'm watching OGC. It's basing. It's a bit messy. I'm just watching that. I'm not too keen on it at this stage. Pioneer Resources I'm watching, that needs to base for longer. It's not the nicest thing in the world. Rocks is not what I was looking for. Okay, that one is a typo, so let's just move on. Watching that needs to do a lot more, but Rex Minerals is starting to base, so we can base a lot longer and get some nice volume on up days. I might be interested. SIS. So a nice ascending triangle formed here as a base, kind of a base pattern, not a continuation pattern. I'm not in it yet. It broke out here just with a little wick on huge volume. On the market down day on Tuesday, it had tiny volume and just a wick, and it just rejected it. And then today the market was a little bit better, obviously, and it's back up and it's challenging that. So if we can just get this closing up, above 7 on nice volume, then I'm gonna take a shot at that. And another one I'm looking at is Vango. Okay, so let's just look at this on a weekly. This is a gold stock. It's setting up on a weekly chart. Looks nice. So it looks like they're West Aussie gold stock, and so on the weekly chart, this thing's based in. I remember actually trading this back here, and it just had a really cool move. So this thing knows how to move when it wants to. It's kind of broken this pennant here on a weekly chart, raced up, based sideways, and I'm gonna be all over that thing if it breaks out. So anyway, that's all I was going to talk about this week. A bit shorter. Next week I will talk more about day trading and what I do there. Anyway, until next week. Cheers.